What's up, everyone? Welcome back to the channel. I've learned a lot in my day trading experience that I want to share with you. In this video, I want to share my pre-market prep, how I go about finding pre-market trades, where I find the volume. A lot of people ask me, Bullish Bob, where do you find volume? How are you finding these volume spikes? How are you finding these stocks to trade? And this is how I'm doing it right here. So I usually wake up and I'll pull up trade ideas. If I wake up before, say, 6 in the morning, I'll pull up Benzinga's scans because trade ideas doesn't start until 6:45, and that's the one downfall I see about them right now. But say 6:45, I start really watching these scans. These four right here are the most important scans to me. This is the fresh meat 15, fresh meat 15 volume, and this is the fresh meat 75, fresh meat 75 volume. These ones right here, a lot of times are going to spot out volume coming into a stock before press release or before news comes in. So 9 times out of 10, I'll see something in here moving. I'll mention it in a chat room, and we'll be talking about it. And then next thing you know, you'll either hear in the squawk box or you'll hear in a press release that there was news on this particular stock, and it justifies the volume and price action that we're seeing. So these will spot those moves early on. So I really rely on these two scans, which are a pair. So this scan goes hand in hand with this scan, and likewise this scan with this one here. So then down here you're going to see the normal high a day, 15 million share flow high a day, 15 to 30, and then 30 and up. You're going to see the high a day here. So anything making high days, we're going to see them here. So these scans I rely on pretty heavily in the pre-market. So if I'm finding volume, a lot of times if it's early on, it's here. And these are just continuations to these scans, so they're going to follow suit. This continuation scanner that I have set right here, this one's going to show me stocks that are trending more so in a daily type of time frame. So these are stocks that I'm going to put on a particular watch list and just watch for volume to come in. If I see volume start coming in, I may take a small size or a position in here to do a quick scalp day trade, as these stocks are already trending and up in the last week. They've had pops on and off. So, and that same goes for recent runners. These are just stocks that have made a list of all stocks that have basically made a move in the past week or two, and things that come to mind are low float stocks that we all want to keep an eye on. And then over here we have low floaters. Pretty much the same thing. It's just a list of low float stocks. If they make a 5-minute high, 10-minute high, something like that, these two scans are going to tell me about it. Down here we have our basically our tank scan reverse scalps. So anything that's trending down real hard, then these are going to pinpoint sometimes a possible reverse scalp on it. I don't play these ones as often. I really stick to the momentum. I like to play high day momentum, and I like to play stocks pretty fast. So over here, you're going to see the up gaps. This is what I really focus on when I first wake up. I'm going to look at what's gapping up and why. So in the past Friday, REVB was our lead gapper at 22% up, and this is at 9:25 in the morning. So a lot of times I would really pay attention to this, especially right before the open, if I wanted to do a 5-minute break. So a 5-minute break is a trade that I often will take at opening bell, and I'll do a GTC OSO order through my broker, which allows me to place an order at a certain price, while when it goes up a few pennies, it will scale out of my position and take my profits, but it will also set a trailing stop loss attached to it. That way, if it were to rip down on me real quick, then I would get out of my spot. I would get out of my position, and I would basically be going into it with a trading plan. So when I look at this gap list, I'm really looking for something that's gapping up with news. A lot of times we'll see things that are gapping up that have no news, but they have, tons of shares, 50 million shares traded pre-market. It's up 50%, maybe 100% in the pre-market, but there's no news. No one can tell why. Those stocks are different. The fact that they're up so much, and that they are up so much percentage-wise and so much volume-wise, they're in play almost just as much as a stock that did have volume. I mean, that did have a press release or PR or news. So we are looking more so for something with news, but if we wake up and we see something that's just gapped up 100% for no reason, trust me, that thing is definitely on the top of my watch list, because it's going to make some volatile moves, which is really great for us day traders. But in this particular day, REVB was our top gapper. And I don't believe it did have news, but I would switch over to Benzinga and I would check. And so I would go over here, I would type in REVB, check it out real quick, and we would see that in the morning of January 14th, we didn't have any news. Now, we did have news the previous day in the afternoon, which is great, but it isn't fresh news. So when I'm looking for something along these lines of fresh meat 15, what that means is something that's fresh, something that's new, something that's moving right now. Not something that was moving yesterday afternoon, not something that was moving a week ago. Fresh meat scans are supposed to find something that's moving right now and something that's fresh, something that's new. Hopefully, it has a PR attached to it, and if so, then we play it accordingly. So when I pull up I'll pull up my news over here, and again, if there was nothing on that one, I go to the next one on the list, which is GFAI, and we go down the list, and we can see that on the 14th there was news down here. They did have news, and I spent a year or more of my time trying to decipher whether the news is worth putting my investment into or not. And what I found in the course of all that learning was, 1 week, one type of news is really going to push a stock up, and then the next week that same news is going to do nothing for that in particular stock. So what I'm saying is that the market is just going to do what it wants regardless. So regardless of what I think about that news article, it doesn't matter. The more important thing about this is that it did have a news article. So it did have fresh PR, and as you can see here, it had something following. So at 7 a.m. it had something. 7:03 we had something. So at 7:03 we had something with numbers attached to it, which is a plus. This is going to be a little bit more helpful. But again, I've read this with numbers attached and it didn't mean anything. I've read it with numbers attached and it went through the roof. It's not what's important. What's important is that there was news and that it was gapping up. That's what's important. So then we would just go over to the chart and we would pull up GFAI and we'd blow up a full version of the chart, or this is what I would do. And then I would go to the day chart. I would go ahead and reset the chart. And I would just mark really obvious levels of support and resistance, more so resistance, because if I'm looking to get in and get out, then I'm going to look where I need to scale out before there may be pressure. So in this case, we can see this really big wick over here. So let me just go ahead and add a line there. And you can see that the line I added is red, and that's just to show me that it's a resistance line. You don't have to do that. You can do however you want. It's just how I do it. So you can see over here there is another wick. So I'm going to go ahead and put my cursor there, mark a line there. Okay. So then I'm going to go over here and I'm going to notice that there's something about this one. Not only was there a wick here that it rejected this area, and this is again on day chart, on this day chart, but it also broke through, rejected a little bit above it. But then this line here, this red line, is a 50-day EMA, which is a really heavily weighted resistance or support line, depending on which side of the stock that it's on. In this case, the stock is downtrending below it. So once it receives, or once it gets up to that level, I would look at that 50 EMA as a really heavy resistance line. If we were to break through it clean with heavy volume, then that would be a huge plus. And we could be looking at clear skies and possibly returning back to all-time highs. Until then, this is going to be looked at, in my opinion, as a really strong resistance. Now, in hindsight, it's really easy to look at this day chart and say, oh, wow, well, it rejected at that line. That was obviously where I would put my mark, and that's where I would scale out. Well, it's really easy to say that, but it's easy to say that because we're looking at this candle here. So say we didn't see this candle here, it just spiked up. So we have to go on this candle based here. So when we're looking at this candle, you can see that this resistance or this line, this is where you would be putting this resistance line. So it's really a good indication of where pressure may come in. And in this case, and it doesn't always happen, but in this case, that's exactly what happened. Pressure came in, sellers took over, drove the price back down, and we had this huge wick on the day candle, which is typical for this stock. A lot of times this stock doesn't seem to be holding its gains, and that's something by looking at the chart, you can always see that as well. So we'd go ahead again. I'm just going to quickly mark anywhere I believe that could be possible resistance. I'll mark one there, and it doesn't have to be perfect. Sometimes you can mark in just an area with a couple lines rather than just one. I'm going to mark right here as possible resistance, and the reason for that is I see a wick here, I see a wick here, and then a few bodies here. It's not perfect. It doesn't have to be exactly perfect, but that's just the way I do it here. Now in this area I see some support here and some support here, so maybe I would mark a line here, but I would change this line to a green line, showing that I see support and possible support in that line. I would also see support right here, this big green candle here, engulfing candle. I would then put a line there, and I would look at that as a possible support line. So then when I switch over to a smaller time frame, to the 5-minute, reset my chart, we can then see that this 50 EMA, which that's another thing actually. Let me go back to the day chart, and on that red line that we see right here, this 50 EMA, let me click on this line here, and I just want to mark that this is the 50 EMA on the day. So I want to mark that just because, like I said, that's a really heavily weighted resistance line. So again, we mark over to or bounce over to the smaller time frame, and what you can see is, of course, once it hit that 50 EMA, we had a double top rejection, or a tweezer top, and it completely rejected and fell right back down. And this candle here is a harsh negative 13.5% candle. So if you were buying up in this area, then you were down a heavy 10% within 5 minutes. These are 5-minute candles. So that's terrible. But what I want to point out is that these are the levels you'd be looking at. So these are the levels that we'd be wanting to look at. So this thing would go up, come back down, retrace back down, and then right here, this is what's important to me, the 5-minute break. So it had a press release, so we had PR, so it checks off that box. We had some volume in the pre-market, although it did taper off, but it did have some volume in the pre-market, and it is gapped up 7%. So that's a plus. So we have 2 boxes checked with that there. So we could go ahead with a 5-minute OSO order on this. So if we look at this candle here, which is a 5-minute candle, we could look to place an order a penny or two above it, and then break above that, and that would be our entry. So in this case, we have the 117 line that we marked as a possible support line. So maybe we now look at this as a resistance. So we say, okay, I'll place my order at 118, a penny above that. So right here, the high of this candle, and you can see the open, high, and low. The high of this candle is 114. So I would normally place my order at 115. But in this case, because I have this line here at 117 that I look at as a possible support or resistance, then I would place my order at the 118, thinking that if we broke above that, it could be a possible momentum play going forward. In this case, it did work out. Now, in not all cases, it won't always work out, but 9 times out of 10, if it doesn't work out, then what's going to happen is it's never going to hit your actual high. It's going to actually hit your it's just not going to hit your order. I'm sorry. It's never going to hit your order here. It's going to actually just go down. So a lot of times, instead of it hitting its new high, it's going to drop way down, and then at that point you just know that I'm no longer a buyer at this price. And when it goes right, then what's going to happen is it's going to trigger your entry. So if you have an order at the 118, once it hits the 118, and you can see this up here, the high of this candle was 129. So if we entered in at 118 at the 118 break, then you would be up at the high of this candle. You would already be up over 10 cents per share. Now 10 cents per share on 1,000 shares equates to a decent amount of return when you're talking about. It may be a small scalp to a lot of people, but in this case scenario, it equates to a nice return to start the day. And this is all within 5 minutes. And you could either choose to hold your position and ride it up and use maybe these EMAs as possible stop losses, or you could just scale right out and just go ahead and start yourself green on the day, and then use that as your cushion for the rest of the day for trading in case you were to make some mistakes. It wouldn't hurt as bad. You would already be up on some of your profit. So let me show you how on my broker on TradeStation how I would go ahead and set this OSO order. So if we're looking at this candle at a 5-minute break, and I'm looking at that 114 up here, that 114 high, when I'm looking at that 114 high and I want to place a 118 OSO order, this is how I would go about it. So I would come over to my broker, I pull up my broker here, and normally I have this on a couple screens. Right now I'm just doing it on one screen for the video. But so I would pull up my broker, I would type in the GFAI, which I'm on the ticker here. I would set on my broker, you could set however many shares you want to order. So say I want to start out with, say I want to do a 100 share order. Then I could do a GTC, which is good till cancel. And then I would attach an OSO, and I could attach a, say I wanted to attach a 3 limit and 2 stop. So this would scale out. I would take 3 positions. On the way up, I would be selling in 3 positions, and I would have 2 stop losses attached to those. So in case they were to come back down, I would have stop losses attached. But let's have a simple, let me put a simple one on here. So this is just a 1 limit, 1 stop. So in this case, I'll open up the settings. You can see that this particular order is to take 100% of the order to scale out at, it doesn't have a scale, oh here it is. So this is the trailing stop. So you can see here on the order that this is the limit. So this is the limit that I'm trying to achieve, or the price I'm trying to achieve, which is I'm trying to get $10 on the trade, which is not likely. But this is more important. The stop market that's on the trade, I have a stop market for 15 cents if I were to leave this on here. So that means if the order were to go through, it would not execute a sell order until it reached $10 of profit, or it would then come back down to a 15-cent stop loss. So if it came down 15 cents, I would be stopped out. If it went up $10, I would make $10. Now, like I said, it's not likely you'd see a $10 gain, and that's not what I'm going for. What I'm going for is, let's scroll this over. There we go. Is right here. Instead of that 15-cent stop loss, what I have attached to it is a 20-cent stop loss, but it's a trailing stop loss. So I attached a OSO order with a trailing stop with 20 cents. So what this does is that, yes, I'm looking to get $10, but it's not likely I'll achieve the $10. But what I'm doing is I'm basically just attaching a 20-cent stop loss on it. And if I were to walk away, then this 20-cent stop loss would still be attached. So if I went over here, and again, 118 is the price that I'm looking to place the OSO order on or at, then I would go down here. I would go to the 118. I would go over to the side of the matrix here. I'd place right there, and because it's off hours, it's asked me if I want to place the order. I'd say yes, and it would say that I can't. And let me see why I can't. Let me see what it did there. I'm sorry, 1 stop, 2 loss. Yeah, okay, here we go. So 1 stop, here we go. So this is the 1 limit, 2 stop. Okay, so this is going to be, I'm going to have 2 stop losses attached to it. So 95% of the order is going to be scaled out within 3 cents, and the rest of the order is going to be scaled out with a trailing stop loss, because $100 is not going to happen. So it's with a 25-cent trailing stop loss. So in this case, I go ahead and I would click on the 118 down at the bottom again. I'll try it again. It's going to ask me again because it's not market hours. So I'm going to hit yes, achieve for the normal market hours. And then because this is a good till cancel, and this order is a attached OSO, a 1 limit, 2 stop order, this order now gives me 100 shares. When it opens, if it goes up to 118, that this is going to execute a market order to purchase 100 shares. But then when it goes to 119, 120, 121, 95 of those shares are going to be sold for a 3-cent profit. So it doesn't sound like a lot on a 100 share order, but it adds up. And like I said, if you start out with green to start your day and with small goals, then it's nice because it gives you a cushion for the rest of the day if you decide to trade for more hours throughout the day, or you can just take your green and walk away. So then what happens is you can look down here, and you also have attached a trail stop market order here and a trail stop order here. So what happens is the 95 shares is going to go up, and it's going to execute at 3 cents. So the trail of the 95 cent is going to go off. But the trail of the remaining 5 shares is going to continue. So you can consider this a lottery pick, and you can watch this go up with your position. Now, as long as this price never fluctuates down more than whatever this stop is at, which I believe, if I check it here, is 25 cents. Yes, a 25-cent trailing stop loss. You can see it's a trailing stop loss at 25 cents. As long as it never dips below 25 cents back down, it will never stop me out. And it will continue up, and I'll be able to watch my profits continue. So maybe I'll be stopped out of my 95 shares, but my other 5 shares I can walk away, go to lunch, go golfing, go do whatever I want to do. And those 5 shares, I know I feel safe because they have that 25-cent trailing stop loss. So if I'm lucky enough to come back to my computer at the end of the day and I see that there was no execution of a sale, then 9 times out of 10 that means that the price just continued going up, never fluctuated down to 25 cents. And I was lucky enough to actually take my lottery pick and execute it before the market closed at 4 o'clock for a nice profit. So this is one way that you can use GTC OSO orders to protect yourself. So in this case scenario now, GFAI is at 168. That's where it closed, and sellers are here at the 169. So say I feel like once it hits 181, I really feel like that's a bullish mark. So I want to buy 1,000 shares at 181. So I just click there, hit yes, and then there my order is already placed. It's ready to go, and I'm ready to watch my profits roll in. So it's going to immediately, if it hits 181, it's going to purchase my 1,000 shares. It's going to go to 184. It's going to sell 950 of those shares. And then I'm going to have 50 shares trailing with a 25-cent loss. And that's going to give me my lottery pick to ride up and watch my profits grow. So this is one way to attach an OSO order. I will post videos in the future going over my custom OSO orders because there is a whole bunch of them that you can do. And now this is through TradeStation. My broker's through TradeStation, but you can do this through Webull. You can do this through other brokers. So they might call it something else, bracket orders or order stop orders, or they just have different names for it. But you'll be able to find it where you can attach the stop loss as well as the profit taking, which allows you to scale out on the way up. So that's the end of this video, guys. If you like the video, give it a thumbs up, and I'll see you guys in the next one. Thanks.